guys, my name's Aaron. I like talking about business, and this is Aaron talking about business on a mountain trail. Look at that sunrise. How beautiful. It's actually a perfect setting because this is our inaugural video of Aaron talking about business. I'm gonna finish these with a sunset, but that's like far off from now. I've always wanted to start an investment newsletter, and I've been writing a food blog for the past 3 years now. And from that, I realized that nobody reads anymore. It's kind of scary. Am I supposed to walk backwards or forwards? This seems really dangerous. Okay, I'm gonna walk. Yeah, but then am I overexposed? It looks like behind me. How do you do this? My head's in the way. Trail is closed temporarily, but that's fine. I'm sure the lighting's changing like constantly, which I apologize for. So I thought I would start this video series off with the most basic of questions, which is, what's the difference between a stock and a business? I'm sure a lot of you guys have this question, and especially those who are just starting off in their investing careers. The answer is actually really simple. A stock is just a part ownership piece of a business. Apple has stock, Microsoft has stock, American Express has stock. Even Dingy Swamp Development Company has stock, or at least they had stock in the 18th century, or 19th century I think. Blockbuster had stock until they got delisted from the New York Stock Exchange because they went bankrupt. So you see that when you buy a stock, you're not just buying a piece of flitting paper that you can trade at any moment for a different price than what you paid for. You're buying a piece of a real business. You're buying a piece of that company's earnings. Stocks are just representative pieces of living, breathing entities that have employees, that create a product, that provide a service. And if you think that company provides good product or service for their customers and that it has a competitive advantage in the business that it's in, you can consider buying that stock. When you buy stock, it's the same thing as being an owner of a business. That goes back to the same thing in the beginning, which is what's the difference between a stock and a business? Owning stock is a conduit to owning a piece of a business. And you should analyze a stock as if it's the price that you can buy the whole business for. So when you buy a stock, you want to approach the process as if you're buying a part ownership piece of a business, in which your percentage of the business that you own through the stock allows you to have a commensurate percentage of that company's earning power. And then discounting those cash flows at a certain rate that accounts for your opportunity cost. And now that seems like a simple equation or mathematical model, but it's actually much more difficult. It involves a lot of assumptions, so we'll go over more of that in a future video about actually the mechanics of evaluating stocks and their earning potential and intrinsic value. But for now, I just want you to make that distinction. I hope this fact corroborates again the point I'm making with this entire video, which is that stocks are not just flitting pieces of paper that you can buy and sell at a different price than what you paid for. The market is not telling you what the value of your stock is worth or the value of the business, but it's telling you the price at which you can sell that business for. So I'm making this big fuss about the difference between being an owner of a business and being a speculator in a stock. And the difference may seem semantical to some of you, but it's actually not a semantical issue. A lot of times the semantics can be turned into tangible, actual actions when you let your emotional quotient take control of your intellectual quotient, which is your IQ gets superseded by your EQ. I'll try to sprinkle in some philosophy and life advice between all this financial jargon, just because finance has a lot of implications and similarities with actual life, if it's not already. You get my point. In investing, you have delayed gratification, which is a very important skill to have. Patience is all it is. You need to overcome your cognitive biases. What are things that you're inclined to think but may not actually be real? You need to be emotionally phlegmatic. When the stock is going against you, should you sell or should you buy? When you buy a stock, the stock trades on a stock exchange. You've probably heard of them, the NYSE, the NASDAQ. These stock exchanges are marketplaces that match sellers with buyers. Sellers that have stock, buyers that want to buy those stocks. And it provides liquidity for people who want to trade their ownership title of the businesses that they own. It's a pretty ingenious way. Before, you had to call up someone who you knew they had the stock, and whatever price they wanted you to pay for it, you had to buy it at that price or negotiate, and it wasn't very liquid. Liquid means that you can buy and sell with relative ease. So the stock market that most pundits talk about, and that are mostly on business news channels like Bloomberg and CNBC, is the secondary market. And for most of you, this would just be a tidbit of information that you probably didn't want to know. The secondary market is where all of the stocks trade. But where do those stocks come from? Well, at one point, a company that has stock that's trading on the secondary market or the stock exchange needed money for an acquisition, for research and development, for growing their business, wanted to raise money, and they did so through the public markets, you and I. They asked us, hey, do you want to give us some money and we'll give you a part ownership piece of our business, which means that you'll have a part ownership stake commensurate with your piece of the business in our earnings potential in the future. And people were like, yeah, we'll do that for a certain price. And after that IPO, they call it initial public offering, which is the primary market, you buy and sell the stock from another person who already owns the stock. And so a lot of people have this misconception that when they buy a stock, they're somehow supporting that company by giving them money in exchange for a partnership piece of that business. That already happened long time ago. In some cases, hundreds, centuries years ago. The company has no part in any of this, but only that you now have the rights to the company's earnings, or at least a piece of it. So I thought I'd give you the mechanics on what actually happens when you give an order to buy a stock at a certain price to your broker. First, I would define what a broker is. A broker is your Fidelities, your Merrill Lynch's, your Charles Schwab's, your Edward Jones's of the world, which allow you to buy a stock on a stock exchange in exchange for the money that you saved up. You decide to buy 100 shares of Apple. You'll put that order to buy 100 shares of Apple with your broker, say it's Merrill Lynch. And Merrill Lynch will wire that order to the stock exchange. The stock exchange will say, hey, does anyone want to sell Aaron 100 shares of Apple at a certain price? And someone obviously will say, yeah, of course. And they'll switch your money with the stock. The stock will wire to your broker, Merrill Lynch, and Merrill Lynch will give you the stock. Or at least they'll be the custodian, which means that they'll hold the stock and then count for you. Hey guys, so I hope you guys liked that video. I thought you guys found it informative and interesting and funny, and the background was moving so you weren't bored or anything. I'll try to tell you everything I know, and I want you guys to meet me in the comments box below and tell me your thoughts so that we can sharpen each other. Please give this video a like, subscribe to this channel, and as always, I hope you guys learned something from me talking about business. This is our inaugural video of Aaron walking and talking about business. Or is that even the name of the show? Aaron talking about business. Wow, it's dingbats cold. I should have brought a jacket.